An increasing number of economists are expecting recession this year. At this point, is the hope of a soft landing just wishful thinking? Joining me now, former White House Economic Council Chairman and Harvard economist Jason Furman. Jason, thank you so much for joining us today.
Great to be with you.
Excellent. Well, we're going to start on kind of a tough note, which is recession worries have dominated the conversation lately, both on Main Street and in corporate earnings calls. How likely is it that the U.S. economy would be able to pull off that soft landing people are hoping for?
Look, I think we could have a soft landing, but unfortunately could translates into about a 1 in 6 chance. With the labor market as hot as it is, wage growth as high as it is, even with a lot of things breaking the right way, it will be hard to get inflation all the way down without a recession.
So when we talk about the likelihood of a recession, a lot of people are obviously scarred by what happened in 2008, 2009. I mean, how severe do you think a coming recession would be?
Yeah. Now, when I say there's a 1/6 chance of a soft landing, that does not mean there's a 5/6 chance of a recession. We might avoid a recession, but have continued overheating, where the unemployment rate stays on the low side and inflation stays on the high side. I think that's a distinct possibility. If there is a recession, the best guess is that that would be a shallow recession because the balance sheets of consumers are still really healthy, much healthier than they were prior to COVID. And even while the Fed continues to squeeze sectors of the economy, especially the housing sector, consumers, at least up until December, seem to have been pushing the other way. The problem is a mild recession may not be enough to get inflation back to the Fed's target.
Really, would there be anything else that could get us back to the Fed's target if not a mild recession would be able to?
Look, the happiest way to get back to the Fed's target would be a huge explosion of productivity growth. The second happiest and a little bit more plausible way would be an immaculate loosening in labor markets, where job openings start to fall, quits start to fall, and that happens without the unemployment rate rising. We've seen some of that happen, towards the middle of 2022. It could happen. It's not my best guess, but I do think that immaculate loosening in the labor market is what I'd be keeping my eyes on for the optimistic soft landing scenario.
I'm glad you brought up the jobs picture because it feels like over the last few months we see these big companies, whether it's the big tech firms or even on Wall Street, massive layoffs being announced. But then as we continue to get economic data, those layoffs that have been announced over the last few months don't seem to be showing up. So what is that disconnect?
Yeah, I think a lot of it is that data is better than anecdotes. There's 150 million jobs in the U.S. economy, and the headlines we read are about companies that employ, a million or two people between them. And, when you look at that comprehensive picture of the economy, we've been averaging about 250,000 jobs a month. To put that in perspective, we need less than 100,000 jobs a month in order just to keep constant with the unemployment rate and the participation rate. So we're still running well above normal steady state job growth. Should also add, by the way, a lot of those people being laid off, they are finding other jobs and they're finding them quickly and easily.
Excellent. So just want to turn to the Washington picture. Debt ceiling talks are kind of dominating the conversation. An increasingly contentious Congress that we're looking at. How much do you see the debt ceiling weighing on markets and the economy?
It's weighing relatively little on markets because markets think it'll be solved. Markets are probably right. The question is, what probability would you put on that rightness? Maybe 90% chance we get through this. There was a bunch of drama like there always is, and at the end it gets settled. But I do think there is a real chance, call it 10%, that something goes off the rails worse than it has before because the views in the Republican caucus in the House and the difficulty of the leadership in controlling the views of its caucus are in a place that I've never seen before in my 25 years of working on these debt ceiling issues.
Okay. And just looking maybe at the geopolitical picture, how much do you see that weighing on the economy?
There's some positives for the geopolitical picture. There's an indication that China may be thawing in its views towards the United States, both on foreign policy and on economic policy. The reopening of their economy is on balance good news for the global economy and the United States as well. The tail risk from the Russian invasion of Ukraine for the global economy is smaller today than it was 11 months ago. So some things are moving in the right direction, but there'll always be new challenges to navigate. And that same Chinese reopening that is going to help with one hand is going to hurt with another by driving up global commodities prices, including oil and what consumers ultimately pay at the pump.
So it's a lot for Main Street, Wall Street to be thinking of. What for you are maybe the most important data points or economic indicators that people should be focusing on to get a sense of the strength of the economy going forward?
Yeah, I hate this question because it's like, which of your children do you love best? I love all of the economic data. I read all of it. But if I had to choose, the wage data to me is the most important, especially the ECI, which Employment Cost Index. We only get that 4 times a year. We're getting it at the end of this month. I think that's key to understanding the inflation picture, more important than the number of jobs or the unemployment rate or job openings or quits, although all of those are important too.
Well, Jason, I think we avoided hurt feelings with that answer, so you shouldn't worry too much. Thank you so much for your time today.
Thank you.